Hey, it's Mack with PriceActionTradingSystem.com. And it's Monday, it's January 23rd. This will be our chart lesson for the day. And wow, believe it or not, this month's almost over. I don't know where the time's gone. But anyway, what looked like was going to be a range day today turned out to be a fairly nice trend down and then a fairly nice trend back up. I still think it's a range day in the end. Um, I was looking at this early on. Here's your overnight low, your overnight high. But notice how we pushed on through there, pulled back, kind of tested it, and kept going lower. And, generally what you want to do is measure your upper side of the range and then pull it down to the lower side and look for that for pretty much a target right there. And you can see we missed that by a couple of ticks, but we just found a strong support. I didn't even look back across here, but there's probably some support from previously down there. But anyway, we found some support here and we reversed. And notice we had this channel, this real tight channel working now. We actually overshot it. And look how and then once we did that, generally you get a break pretty close thereafter. And look how it's almost a perfect measured break on the other side. And then there's two legs down and then we reverse. And you can see there's actually two legs in that first leg and then your second leg. And I want to come back and talk about this because I had a trader send me an email today and he's all flustered and frustrated. He was actually splitting hairs over, and you can see we went a little further on that measured move. A lot of times if you measure the opens and closes, you get almost the perfect measured move, but we don't want to confuse it. So really that's your first leg, then look for one, and we went a little further than that, and then it reversed. And this trader had some couple of different lines on here, and he's trying to decide where it broke or when it didn't. And it's so much easier to put it on there at the end of the day. Well, I don't put these trend lines on here at the end of the day. Some of them I do, but for the most part, you can go look at our midday chart, and I've already got all these lines on here long before. I had this one after the first two swings this morning at 8:40 something, and it played out perfect. His trend lines, I'm going to come back and show you what he had in a little bit. He had something a little bit different, but this played out perfectly. The one going up, we get an overshoot, and then we get a break on the other side about the same and move to a new high, and then it went flat. So this stuff works if you try to box it in and put it in perfect rules, because you could argue that we had a break here and two legs right there. So even if you'd went long there, it would have worked. And actually, I'm going to go ahead and mark that. I didn't mark it earlier because I was a little concerned about it because I did draw these first two swings in case this is a spiking channel, which it was looking like, which I believe it was, but we reversed. We couldn't make a new low and we reversed. We tried to come back again here, but we couldn't and went higher. So you got to be careful on this one because if this trend line is in play, it's going to be there's a good chance you could get trapped and when you need to be looking for shorts still. And there's a couple of shorts here that set up perfectly. And so these were easy shorts. And there's actually another one I missed. I forgot to mark that one. And there's a reason why it's I didn't mark it, but I thought about it some more, and it needs to at least be green. I like the trade, I'll be honest with you, but I'm not going to make it red. I want to make it green. And the only reason is because it's right into the low of the day, and that's real risky. There's not much room. But look, we made a new swing high here. First entry long, pull back, second entry long, it goes out the top and fails and turns out and goes out the bottom. You're probably going to get a scalp out of that. And if this channel is over here where you copy this line and drag it down, then you got a long way to go. That turned out to be a really nice trade. It's a little aggressive, so I'm going to leave it green. But we'll come back and talk about this pattern again here in a minute. But let's back out here and talk about the trades, and we'll work our way back across here. When I came in, this is obvious trading range look. And somebody will, ask me, how do you know it's a trading range? Well, this is your overnight high, this is your overnight low, and we're trading right dab in the middle of it. So obviously at that point it looks like a range. And plus we're working up. We got one leg up, and then we got a correction here, and we'll probably get another leg up. The market moves in two, so we're always looking for double moves and such. And you can see that puts you right back at the top, and we actually pushed a little bit higher and trapped people, and then it reversed. I guarantee you, a lot of people went long right there, not knowing any better, right into the overnight highs. I mean, when you get a measured move close to an important support and resistance, be careful right in there. Doesn't mean, I mean, it could have went higher, but the odds are it's probably not. And we're going to play the odds. So this was a great place. Notice that big move up, pull back first entry, pull back second entry, and you got a little congestion here. That's a little failed break lower as well. Um, I originally had the trend line a little bit steeper, and so it looked like it was bouncing off the trend line. So I entered there. It comes back, and it just gives you a little another test of that. And I like going adding on there. And I ended up adjusting the trend line off of that one, and that turns out to look pretty good. And then you get another two-legged pullback, and so you get another second entry long right there, right at the EMA, a little higher than the last double bottom. This is just another double bottom. Enough room to get out, and this turns out to be a nice move. Look at it go. And you probably want to look to exit right up here somewhere around this resistance. If you try to go any higher and exit, you probably end up getting out the same place when you got to break lower. But this is not an ideal reversal until here. What you want to see is prices push through the EMA and have a failed second entry long. So basically two legs with a failure to go long on that second entry below the EMA. That's your ideal reversal type pattern. I like this one simply because that was the overnight high, and we came back and retested it. I did make it green. It's a big bearish bar, but there's a few stacked up there. Those aren't really dojis. So you could have really, if you want to be a little more aggressive, you could have gone short there, but you're better off to wait on that reversal pattern, which comes right here. Notice the new high. Pull back first entry long. We shoot through the EMA. We pull back and test it, test that trend line, and you get a failed second entry long. And again, those look like dojis, but those are all bearish bars. We closed down near the low on just about every one of them. They're bearish. Go short right there. That was a quick, easy move, and you probably got a runner out of that. It pulls back here, but now you're too close to the lows. Notice how it bounced right off that low. And this is a good example of why you want to wait on a higher low, because if you'd have went long there, you wouldn't have got out of that. You probably could have figured it out when it starts going sideways. You probably could have said, hey, I better take a tick or two or whatever it'll give me and get out. Because if you didn't, look what happened. The bottom falls out of it. You're not expecting that to happen. I'm expecting it to bounce there. But it doesn't. But you never really get a setup to go long. And even if you did get aggressive right here, you got a chance to get out. When it starts going sideways like that and not pushing higher, that's telling you something's not right. We should have bounced by now, because look how quickly this reversed off the top. It should have reversed. Look at this one. It tried to go lower a few times and then broke lower, and boom, it takes off again. So now we're working down. You got your first two swings. You get it confirmed right here. Look how it's fitting real nicely on the bottom. It's bouncing off those lows until you finally get that little overshoot, and then you get that real drop below. And notice how now that you got an overshoot, you're probably going to get a break. And you get that right there. And look, you're moving up. You get a first entry short. You move up. You get a second entry short. Plus, it's a retest of this breakout area. It's also, look at that congestion going across there. It's a failed break out of that. Perfect trap setup. And you actually get another chance right here. The only reason I didn't mark that one was because you do have a doji in there, and you got 3 or 4 sideways, and it's right into those lows. So that one's a little risky, but I'll be honest with you, really, if you want to be aggressive, you probably want to take that trade. It went out the top first on a fairly bullish bar, but we're not looking for longs yet. So it drops on down and finally makes a new low. Now it could reverse out of here, but that don't mean you automatically go long. If you want to be aggressive on that drop there, and that you might go long right there, and guess what? If you did, it worked. Even though we went lower, it still worked. And then you make that, you push up, and it turns down and turns back up again, and then goes down right out the other side. I like that for a short. It's right off that possible trend line. This confirmed it, and you get another shot at it right here. You could have actually gone short below that bar right there and put your stop right above it. Pulls back, gives you a failed second entry long. Notice that's a new high. That's your reversal type pattern. Goes out, it went higher first, and you catch people trying to pick bottoms because they can't wait for the right pattern and for the reversal. Go short right there. And it's obvious they had people trapped. Look at the bottom fall out of it. So now you got a break and you got two legs down. There just happen to be two legs in that, and there's really two legs in this one. Move down, a little correction. That's leg one with a little correction, then leg two. And then it reverses. There's a little shorter term channel in there. Neither one of them really come into play. You don't really want to go short here. We just came off the low, so prices are probably going to come back here. That's the first break of this little short term one. It sets up here. It looks like it may turn down, but it doesn't, and it keeps going higher. And then look what happens. This is a double bottom, so pull back first entry. Pull back. That's a failed second entry short when everything's above the EMA, and you're looking and you're expecting you might get a reversal. Go long right there. That was an easy scalp. Pulls back. Test the trend line again. It's only a first entry, but this is really a new low. So first entry short, second entry short, you can treat that like a second entry. And then it just keeps coming back. I didn't like this one because you're so close to these highs. But when it comes back again, it gives you a little more room. I like right off the trend line. And really you could say it tried to go lower. It touches the trend line and the EMA, and then it confirms it a couple more. It's like it's like a two test rule or whatever. We're probably coming back to here, but this thing just keeps going. And so that's what your reversal looks like. And then guess what? You get an overshoot. There's a second entry short here, but this has been too strong, and this could be a two-tiered channel. So I don't think you want to go short until it pushes through the EMA and pulls back. And look what it does. It tests the underside of the range. It went through the EMA, gives you a big bearish bar. And look, pull back first entry, pulling back second entry, and it fails and gives you a big bearish bar. Go short right there. That's your reversal pattern. Turns out it's not a reversal. It's the first break of the trend line, but it still fits our pattern to try to take a short there. And look at that trend line working down, and that's your first close outside. So it all works out, and then you get another reversal right here. Notice that low, first entry, pull back, goes right through the EMA. Second entry, look how everything's closing above. That's a fairly bullish bar. Go long right there. So you can't. I guess what I want to try to say is what I told this other trader is you can't box it in to the rules so tight that as soon as you get a break here, all you're doing is looking for longs. It may take a few minutes, and you may get more. This thing may not have ever reversed. It might have just went into a spiking channel and kept going lower. So until you get that reversal pattern, don't be trying to pick bottoms. And that's why I'm hesitant to make anything like this anything more than green, because you're trying to pick bottoms. But what he had his drawn a little flatter than mine. He had two lines on here, and he's all flustered because he doesn't know which one of them's the right one. You really get to the same place, either one. If you use the brown one, you get your break here, and you move to a new low, and it reverses. You don't get two as clear legs, but you still follows the rules. And if you use the red one, well, that gives you this setup real clear, and you still get the break and a new low. If you use the green one, you get the break right here. You still get this little trap right here. Notice how it goes up, pulls back. Let me make this bigger. It's getting a little messy right in there. And it goes up, first turns back down. You still get the trap. Goes short right there. And then you get the reversal pattern right here. I explained why that one's green, because you don't have a lot of room. So, I mean, these two lines are really not a whole lot different than mine. You still get a break, almost or the same thing. And if you don't get a break on the brown one yet, you get a perfect setup. Notice you're coming up first entry, pull back, you get a second entry right off your trend line. If you decide, well, hey, I don't know if that one's right, maybe it's the green one, then you get a perfect setup off of that one. So even being close here, you really come up with the same stuff. So you can't get so, I guess the point I'm trying to make is you can't get so hung up over did the rules, if you're expecting the rules to be perfect in price action or in trading period, no matter what you're doing, you're going to have trouble with this. And that's why I always talk about engineers and math type people and analyticals, people that deal in absolutes. They're going to struggle in this business because they can't wrap their brain, or I shouldn't say they can't, they have a harder time wrapping their brains around close is good enough. And I've heard it described before that trading is like seeing something happening out in front of you while you're driving down a foggy road. You can see the lines on the road, you know you're in between the stripe line and the white line, but it's foggy out there and things sneak up on you quick and things change quick and you just don't have a real clear picture. And that's what trading is like. You know, we have a set of rules that are probably going to work 90% or better most of the time. It's not 100%, but 90% is pretty doggone good odds. You know, if you look at what casinos do, they're happy with a 1 or 2% odds in their favor and they make money long term. We can do a whole lot better than that. But we have to understand that we're going to lose a few hands, but in the long run, we're going to win more than we lose, and we're going to come out on the right end of this thing. And that's what casinos do. They're going to lose a few hands, but in the long run, they're going to win more times than they lose, and they're going to make money. They're going to end up with all the money. If you sat down and played over and over, eventually you'll lose all your money to the casino. You might have some win streaks and some days you can walk away with a little money, but in the long run, they're going to get your money because the odds are on their side. And it's the same thing as trading. We want to put the odds on our side, so we use our rules that we know work 90% of the time. Are they 100%? Are they infallible? No. But the key is you have to do this long. This takes longer than most people understand. And the people think because they've been doing it a few months that they're going to sit down and trade against people that have been doing it for years and years and that they're going to be as good as they are at it. This is a skill, people. This is not something you can read a manual or go sit down in a trading room or even sit down and watch over. You could sit here for a year and watch over my shoulder, but the minute you get by yourself and try to trade, what you watch me do is not going to help you at all. It's not. I've tried it. It doesn't work. It's a skill that has to be honed, just like when a doctor first comes out of medical school, or say a surgeon. He's not automatically going to be a good surgeon. He may have the book knowledge and he may know what to expect and what to do in certain situations, but until he starts cutting open people and working on them, he's not going to get that skill. It's going to take a while. He's going to have to operate on a lot of people. The more people he operates on, the better surgeon he's going to be. Same thing with a lawyer. You're not going to come out and automatically be a great trial lawyer. You're going to have to hone that skill in the courtroom over time. And, you might, a professional athlete, you can't just walk out there and expect that you can step in the batter's box and hit a professional baseball with a guy throwing a curveball to you 98 miles an hour. It's not going to happen. Now, if you got a chance to practice and get out there and try every day, eventually you might get to where you can hit it sometimes. And trading is no different. You got to get out here and practice, and it takes way more practice and way more time than most people understand. And I try to tell people that, but they just think they're going to be different. They think that, they tried a little bit and had a little bit of success, and they think they're ready. And then they fail. They think because they failed, the system or whatever they're doing is the problem, but it's really not. It's them. They're not ready yet. And so they move on to the next thing and they start all over again. Or they start trying to tweak this and tweak that. And this particular trader, I hope he watches this video because I'm doing this for him more than anything, but I know it'll speak to a lot of you. But if you come in here and you think you're doing right and all of a sudden you have a loser and then you try to change to something different, it's not because the system didn't work. It's because you made a mistake and you didn't really probably know what you were doing. And I see that over and over and over. I'll see somebody send me an email and they'll ask about a trade. And the trade will be so wrong and so far off, but they're somehow they saw it in their brains as being right. And then when I pointed out to them, it's like, oh, duh, it should have been obvious. What was I thinking? And they, and they're not anywhere close to being ready to go in live. So I'm not trying to discourage you from going live, but understand that until you can, what you need to be able to do is get you a sim account and start it with maybe $5,000 or $10,000. And when you can double that, trading properly and not breaking the rules and not doubling down and doing all these dumb things that traders do, then you're probably ready to at least give it a shot for going live. Try it for a few trades for a week, and if you're still struggling, go back to sim again. Double another sim account. But if you can't double a sim account starting with $5,000, then you're never going to make money trading live. So don't waste your time. More than anything, you're not really wasting your time. You're wasting precious trading capital. Don't blow your precious trading capital because you're not ready. I can assure you, if you can't double a sim account, you're not ready. You're going to lose. You're going up against people that do this every day and have been doing it for years and years, and they're the best of the best. They're going to outsmart you. So anyway, I hope that was helpful. I didn't mean to get off on that tangent today, but when I get emails and I see people flustered and they're nitpicking whether one little trend line was right or wrong, and there's not even hardly any difference in them, then they're worried about the wrong things. And so I want to get that across to that trader. And again, I hope he watches the video today. And don't take any of it negative. I'm trying to help you. I'm not trying to, a lot of times I'm a little, I hate to be too hard on people. I don't want to come across as being too hard on them. I'm just being honest with you. You're not ready. You don't have enough experience. I've seen that guy improve probably 500% from when he first started, but he's still nowhere near being ready to go live or trade live yet. If you're sitting there worrying about whether a trend line that's off a hair's width, one of them's right and one of them's wrong, and which is it, then you're worrying about the wrong things. You're looking at it totally wrong. We need these trend lines. They're important. We need the rules of the break and the new lows. Those are all, but just like right here, like I showed you right here, technically you got a break right here, or when I say a break, a convincing close outside that trend line. You get that for sure right here. And then look, you get one leg down, a little two-legged correction, a second leg down. So if you just think, hey, all I'm looking for is a break and two legs down, you could go long right there and catch the bottom of the day and make all kind of money. But it's not that easy. You got to wait on the reversal pattern. There's no reversal pattern here. You might take a chance here on a scalp, and you would have got that, but you're not getting any more. Notice what would have happened down here. You would have got another scalp. You wouldn't have got any more because it came back and got the stops. You wouldn't have probably taken off unless you entered right here. And the only reason I didn't like that one is because of this trend line working down, and you're still below the EMA. Notice how coming down here, we never really get through that. We kind of push through just a little, and then finally you push straight through, and then you pull back and you get a failure and then go higher. That's what you're looking for, just like right here. You push straight through, you pull back, you get a failure, and then you go the other way. Look at it right here. You push straight through, you come back a couple of times and get a failure, and then you take off. It even came back a couple more, but that's because you're kind of going sideways here, and you get a few failures out each side a couple of times. So I hope that's helpful to not only that trader, but to everybody. I'm going to wrap it up. We'll be back again to do it tomorrow. This is Matt with PriceActionTradingSystem.com, and we'll see you next time.